Gold to silver traded at basically 16 to 1 for over 500 years. Now you've got this blowout of this ratio, of 70, 80 to 1. I think there's a perfect storm. We're going to see ratio collapse. We're going to get closer to its actual mining ratio of 8 to 1.
Please join us for our next live stream Sunday, January 31st at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be Sunday, January 31st, 9 p.m. Eastern. See you then. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. As always, if you are new to our channel or if you haven't already done so, please do subscribe, hit the bell to be notified on new updates, and give us a thumbs up if you like what we do. We truly do appreciate your support. Keith Neumeyer joins us today. Keith Neumeyer is the CEO and co-founder of First Majestic Silver and chairman of First Mining Gold Corp, as well as the Entrepreneur of the Year 2012. We're delighted that Keith joins us today. It's time to saddle up and silver up for Keith Neumeyer. Keith, welcome to SBTV. How are you doing?
Great, Patrick. It's nice to have time to chat with you today.
Keith, I want to start off where if you can share with us how your journey to become CEO of First Majestic unfolded.
Okay. I guess it goes back to my days, when I put First Quantum together, because, that was really, I was working, I was on the floor of the Vancouver Stock Exchange working for three of the big national brokerage firms in the mid-'80s, up until 1989, when the floor was closed due to computers taking over the outcry, auction system that was in place up until that point. And I was a pro trader, and I found myself out of a job in '89, and I dabbled around, trying to make a living here and there until in '91 I got a job at a high tech company, and the investor relations side and corporate development side, and that was a real eye opener. I learned a lot about public markets and so on and so forth. But I really wanted to. I've never been a good employee. I've always wanted to kind of do my own thing and build my own things. And over the next few years, I was able to accumulate a fairly sizable position in a public company. I won't get into the details because we don't have the time today, but it ended up going bankrupt, and I ended up taking over that company, and I changed it into First Quantum Minerals in 1994. I took it over in 1992, but it actually officially became First Quantum Minerals in 94. And, when I left First Quantum in 2000, after 8 years of being as the president of that company for, I think, 5 or 6 years, I left as just a director, and the company was doing something in the order of 135 million US in revenues and had something like 9,000 employees. And I started it from scratch with a group of individuals that are currently still active in that business. So I learned a lot about supply demand fundamentals, about copper. I learned a lot about public markets, and so I already had the trading background. So I knew a lot about public markets already, but running businesses, financial statements and all that regulatory, legal stuff that needs to be learned as, a director and an officer of a publicly traded company was a challenge, and I learned it. And then I kind of went on a bit of we had the dot-com boom in 1999 and 2000. I made a little bit of money and lost a little bit of money, probably lost more than I made. And I wanted to get back into mining, and I was looking at gold, but silver to me was just so compelling. I did the supply demand fundamental analysis of silver, and I just thought it was the most compelling metal on the planet to invest in. And there was no one in the business. There was a handful of companies that called themselves silver companies. And I said, geez, this is designed for me, because it looked like copper to me, right? Because there are so few copper companies out there, niche market, super important metal, what we need, for the future of the human race and all that kind of stuff we can get into. And I said, okay, well, this is what I'm doing. And I put together a silver company in 2002 with some pretty aggressive goals in place. I wanted to have a 10 million ounce producer within 10 years, which I achieved. I also predicted silver would go from $5 to $50, which it did happen. It took longer than I thought it was going to happen, mind you, but it ultimately happened by 2011. And but I would have never predicted silver had gone from $50 all the way back down to $13. So that was a shock. And that set, reverberations through not only First Majestic, but the entire mining sector, which, really created a lot of problems over the last 5-6 years. And, since 2018, 2016 was okay, but it was still 2017 was not great. 2018 was just coming out of the woods. But it's really only been in the last couple of years that we're back on track again, and, we can really start building our business.
Yeah, because we had seen silver moving sideways for such a long time, and I'm just curious, how did you manage and maneuver First Majestic through that long sideways period for silver?
Yeah, it was tough, and I lost a lot of sleep over many months, and we laid off under my direction about 15% of our workforce. Actually, more than that. About 25% of our workforce we laid off over an 18-month period from 2014 to the end of 2015. Silver prices, stayed in the $40 range, as you probably remember, in 2012, after hitting 50 or close to 50 in 2011. So it was still okay. 2013, silver was in the $30 range. So it was still okay. We're still doing fine. But 2014 came along, and silver crashed through $20 in June of 2014 and hit $16 an ounce that month, and it was just like devastating. And we started losing money, and we had to just grind the business down. We had capital investments, I think, planned that year of something. I'll go back and look at the PowerPoints, but it was somewhere in the order of 160, $170 million worth of investments planned for 2014, and we had to cut it all the way back to sustaining capital to only 50 million just to stay alive. And we kept it at that number for 3 years in a row and laid off a whole bunch of people. And we started making money again at the end of 2015, despite the fact silver prices were still quite low. We turned it around and we started making a profit.
Yeah, and so you turned it around, and then here comes COVID. How did COVID then affect First Majestic, and is everything back to normal now? Operations back to normal?
Yeah, look, we came into 2020 with a pretty aggressive plan. We had planned on spending $172 million in capital investments in Mexico in 2020. And of course, we all know what happened. We got slammed by these shutdowns, and we came in with about, I think, around 24 million ounces of silver equivalent production planned for the year. We came closer to 22 million, still a bang up year. We ended Q3 and Q4 off on an extremely positive note. The team, we should be patting our teams on the back for, what they're able to pull off. The working in the current environment with all the protocols in place and all the testing. And, we've done over 60,000 COVID tests, since summer of last year. If you're at the mine, it's possible that you'd get 3 tests in one day. It sounds silly, but if you go into the main office at the mine, you get tested immediately. If you go from the mine to the mill, you get tested again at the mill. If you go from the mill to the mine itself, or the office, the mine, the mill, because there's 3 different divisions within the mine, right? And you cross over these barriers, you get tested every time. It's a little bit overkill, but that's the protocols we have in place. And most people obviously don't get tested 3 times in one day, but I'm just saying theoretically it's possible. But you show up at the mine, you're going to get tested, and if a bus load of contractors show up to do some development or exploration work, the entire bus gets tested. We have quick tests that are instantaneous, and if anyone on that bus is tested, the whole bus gets turned around and gets put into quarantine. So what's happened is, and there's one reason why costs have gone up a little bit in our sector, the mining sector, is because we now have a fairly large workforce, about 10% of our workforce that's deemed vulnerable. In other words, they're in this quarantine status, and in order to keep production up and running, we need to bring in temporary workers and contract workers to fill that void. So we have kind of a double salary going on, right? So we're paying people to stay at home, and we're also, paying contractors to come in and fill those roles.
Okay, I had no idea it was that was going on. But Keith, if I heard you correctly, you said you were a bad employee. What? Why were you? What went on it with Keith Neumeyer early on?
Well, I'm 60 years old now, so I'm probably much more calm than I used to be. But when I was in my 30s, building my career as a little bit of a control freak, so I had to be on top of everything, and I tended to be a little bit belligerent at times, and sometimes annoying to certain people. So I was just, I guess I had a bit of a reputation of not exactly being the funnest guy to be working with, because I was pretty demanding. But nevertheless, as I got older and got a little bit more diplomatic, I've learned to become a little bit more easier to work with.
Okay, no, thanks for sharing, because I need to let my boss know that there's hope for us bad employees still. But moving on, yes,
it doesn't mean you're not a bad person. It's just sometimes you're better than your boss, right? Don't tell your boss that, but I'm just saying it's. But it's me. Me hiring people. I want to hire people that are better than me, right? And that's the whole challenge in building a business, right? You always want to surround yourself with the best possible people. So I don't mind having people better than me around me, but sometimes someone's going to make the decision at the end of the day, right?
Yeah. Okay. Just for safety, I'm going to edit that part. but Keith, you've said I've seen a tweet also where you stated that gold is the granddaddy of money and silver is a strategic metal. Can you give us some insight as to why you say silver is a strategic metal?
Yeah, well, thanks for bringing it up. It's a phrase that I came up with, several years ago, and I look at copper as strategic as well. So silver is not the only strategic metal, but what I mean by that is the fact that 70% of silver is used in commercial applications in some form or the other, and silver production is dropping substantially over the last 4 or 5 years. Despite some of the work that the Silver Institute publishes, which is another topic all in itself. We have been in deficit for multi years, and if you go back 30 years, the deficit has been pretty dramatic. Whereby they're depending on who you listen to, there's somewhere between 1 billion and 2 billion ounces of silver in commercial form sitting on the Earth's surface, and the miners are producing 750 million ounces, or at least that's the estimate for 2020, and the world consumption is somewhere around 1 billion, or maybe slightly higher than 1 billion. You've got two major new technologies, electric cars, which only been around for a handful of years, and we can talk more about that because I'd like to get into that story because it's super important. But also solar panels, which also is a relatively new technology. So you got, and between these two technologies, they've become major drivers behind the silver price, and then people are waking up to that. And if we want to adopt this new Green Deal, or we want to get off oil and gas, we want to electrify the planet in better or more efficient ways. This call couldn't be done without silver. All the technologies that are in our homes that we rely on, flying around the world, all the stuff that we use and take advantage of as a human race requires silver. And people just look at silver as a poor man's gold, which is not. Silver is not gold. Gold is money. Silver is a strategic precious metal.
I guess maybe we'll touch on electric vehicles. Now, I know a big chunk of the battery is made up of lithium, cobalt, and nickel, and they're starting to lessen cobalt and use more nickel for the electric vehicle batteries. But when it comes to silver, and I always get this question, how much silver roughly goes into electric vehicles, and what role does silver play with electric vehicles?
Yeah, and it's well, let's talk about batteries first. There are silver zinc batteries out there. Boeing has one on a submarine that they've sold to the U.S. government for long range work that it does, monitoring the seabed, and it needs a very high end battery that's very cool, that lasts a long time, that has low chargeability requirements. And I'm assuming it's a big battery. I've not seen a picture of it, but I've just read articles about it. So it's the technology's there on the battery side. I don't know if the silver battery itself will ever become a commercial product in consumer electronics. I think, there's ways to go before that would ever occur. I'm actually a shareholder of a battery company, and I talk to a couple of scientists on this topic, frequently over the last. I've owned this company for over 5 years now, so I talk to the CEO there once, probably every 3 to 6 months, and so I'm pretty in tune with what's going on in that space. But in the electric vehicle space, where is silver used is in the connections, because if you look at a fuel combustion car, of course there's a small computer there. You've got your GPS, system, you've got your screen, you've got all the, electronics, and, cars are becoming more of a computer today than they were, 20 years ago. So the use of silver going into these, even a fuel combustion cars increased over time just because electronics have been increasing. But in a regular Tesla car, and I'm not a Tesla expert, but I've been told that there's about 600 battery cells in your average Tesla vehicle, and most of it's joined by copper circuit boards, of course, but all the high-speed connections is silver. Because all you've got is just this massive computer sitting on top of these 600 battery cells, and this computer's job is to make sure this car doesn't blow up. So it's constantly monitoring the temperature of all these 600 cells and turning them on and off depending on the needs of the vehicle. And it's a very complex system, and requires very, very high speed computing power to be able to properly operate that electric vehicle. And that's all done with silver. Now, ask Tesla or ask Toyota or ask BMW or Audi, how much silver did they use in one of the electric vehicles, and they would run for the hills because they don't want to tell you. Because the last thing they need you to know as an investor is, what the tightness of supply of the metal is. So, because they don't want every institution on the planet to front run them and drive the price up. So, getting this information, it's even like an iPhone. How much silver's in an iPhone? How much silver's in an iPad? How much silver's in my laptop or 40-inch television? We have estimates of the silver that goes into all these electronic devices. Toasters, refrigerators. I was talking to a trader back last fall, which is something I didn't know. A fellow in New York, he was telling me that the biggest consumption of silver, just a brand new consumer, was freezers, because COVID forced everyone to go buy freezers because they want to store their meats and so on at home, and so there's huge spike in freezers, and you couldn't even buy a freezer on eBay or wherever or Amazon because all the freezers were bought up and all these freezer companies were scrambling. And of course, silver is a big component of a freezer. So interesting, topic.
I was one of those guys that scrambled to get a freezer. I'm one of them. But
a friend of mine tried to buy one, and I don't think he still has got it.
We touched on green initiatives. Will green initiatives push up precious metals prices, silver, for example? And if not, will it cause some miners to fold, cause mergers and acquisitions, or both, or perhaps even cause a shortage of metals?
Well, we already have a shortage of metals, so that's a moot point. We've had good solid 6 years of lack of investments in developing new projects around the world. It takes a long time to develop a mine. From the drill bit, for one thing, you've got to get a discovery. First you have to have a geological theory. Then you've got to, acquire the property. Then you've got to get permits to drill it. And that in itself could take, 6 to 12 months just to get your first rig on the ground. And assuming your geos are right, which most of the time they're not, because a lot of this stuff is just based on theory. So assuming they're right, then you start spending more money, raising more capital, hiring more rigs, and then it all comes down to economics. Well, now that you've discovered a metal, silver, copper, now you got to develop enough of it to make it economic. So, that process could take another 2-3 years. And it very much depends on the market conditions. If the market conditions are poor for the miner, that miner can't raise capital to do the necessary drilling to develop that asset. So the asset sits there and nothing happens to it. And that's what's happened over the last 5-6 years. Now that the money is starting to come back into the system, a lot of these projects that have been sitting there with eyeballs on them for future development are now getting drilled. And we're seeing some excitement in the marketplace. We're seeing some juniors starting to come up with some interesting drill results. And that's all great. That's fantastic stuff. And we need that to happen much, much more. But then you have to develop, enough ounces. And then you have to run economics. So that comes to grade, comes to depth of the ore body. Then is permittability. Will the government let you develop it? Will the communities let you develop it? The indigenous groups will let you develop it. And that's another whole process, the environmental legislation, all that stuff. So you could be spending 5, sometimes 10 years just in the permitting process alone. Then you got to get permits to break ground. You got to raise more money. So you need the market on your side again to raise the necessary capital to build the mine. And then, a mine can cost anywhere from $100 million to $1 billion, depending on the size, and sometimes more. And that's going to take you a few more years. So, best case scenario from drill bit to production, you're 10 years. It could be 15 to 20. And there's many mines around the world that have been sitting there for 20 years and still have not been developed because of the governments just don't want to permit them. Look at Northern Dynasty's asset in Alaska. Look at there's another big asset in northern Canada as well, in the Arctic. And there's assets around the world that are sitting there waiting to be developed that the governments just don't want to develop them at. So we know that the metal prices are not high enough to sustain the needs of the human race. Right, because we as a mining company, the silver industry itself, producing 750 million ounces a year, and the world consuming over 1 billion ounces a year. How long can that last? Right, and with the new Green Deal, and on the electric car, I know you're going to ask me questions about electric cars, but there's just simply not enough silver being produced. In order for the miners to produce as much silver as necessary to do what all the governments around the world want to do, we're going to have triple-digit silver just to get there.
Okay, so the numbers from, let's say, Silver Institute, would you say those are correct, or do they need to be looked at again?
Look, I'm pretty controversial when it comes to that kind of stuff, and we are First Majestic is a member of the Silver Institute, a reluctant member. I'll tell you quite honestly. There's 3 data collection services in the world. One is GFMS out of London, England. It used to be owned by Reuters. It was sold a couple of years ago to BlackRock. BlackRock owns the GLD and SLV. They manage those major bullion funds. So how can you be on the news dissemination side and be on the investment warehousing side at the same time? Isn't that a little bit of collusion, or a little bit of conflict of interest? At least in my view, it is. The next one is Metals Focus, and that's a spin out from GFMS. A bunch of the guys at GMS jumped ship and formed their own competitor, and then there's another one in New York called CPM Group. And that's it. And they all use the same data. And it's very much flawed. Like, they don't know how much silver a Tesla car uses. They don't know how much silver a 40-inch television uses. They estimate, but how many cell phone companies are there in China that no one even knows exist and don't even count? I've been in Asia, and I know how many different electronic devices are on the market, and how can you possibly count all that? So you can't. So, and I've spoken directly to some of the end users, some of the big electronic companies. I've asked them specifically, how much silver do you use in a year? And they will not tell you. They're completely paranoid about you knowing how much they use. So on the supply side, we know the numbers, because most of it's public. But I'll just add one caveat to that. On the refining side, we don't know, because most of the refineries are private, and they don't like to talk about how much metal is going through their refinery. It's very confidential information. I know a couple of people that own refineries, and they just don't talk about it. So it's hard to know where the metal's coming from. and also how much they're producing. So from a public company standpoint, we know what the miners produce because it's all public. But we're missing a component of the supply side, and we're missing a very large component of the consumption side, which is just unknown consumption. And these institutes, the three that I mentioned, they use plugs like hedging. Why would a paper transaction, a hedge transaction, be in your supply demand measurements of the physical flows of metal? It makes zero sense to me. But you look at their tables and there's a line called hedging. They also have a line for recycling, and they have no clue what the recycling is because that's all done by the refiners, and the refiners don't talk about it. It's a plug. It's just a balancing number, and they come up with investment demand, another plug. They guess. They don't exactly know what it is, but they plug it in. So they, at the end of the day, they try to balance the numbers. They have a supply number, a demand number, and then a potential deficit or potential surplus. So most of it's made up.
Getting to Wall Street ETFs and COMEX, some people say silver and gold prices are manipulated. Others say it's simply a function of supply and demand, volume, candlesticks, or the four tails of Fibonacci. But in your view, is the silver price being manipulated?
I don't like to use the word manipulated. It's kind of an overused word, and I'm not sure if there's someone in some ivory tower somewhere saying, "Hey, by the way, we've got to keep silver price at X because of this reason." I'm not sure if I quite buy into that. And same with gold too. But there are forces that don't want certain markets to move. Commodities. It's not in the best interest of the government to have oil prices at $100 a barrel. It creates inflation, it creates economic turmoil, and blah blah blah. Right. And if you're JP Morgan or HSBC and you just sold 50 million ounces to Sony at $25 an ounce, and you're obligated to deliver those ounces to Sony for every month for the next 12 months, you don't really want to see that price go over $25, do you? Mm. So now they're short. They're delivering into Sony's order to produce televisions, and silver's $30 an ounce, and the traders at JP Morgan go and say, "Oh my God, like we're losing money on this trade," and it starts costing them margins and all that kind of nonsense. So there is an interest to keep a lid on commodities right across the board because they're used so much in industry, and industry relies on these commodities. So they don't want the volatility because it's hard for them to manage their business. Us as a miner, they don't quite honestly care about us, I guess, but I guess they care more about Sony because we try to do our budgets at $25 an ounce, and next thing you know, the silver's at 20, and we got to start cutting costs. And then if silver goes to 30, we can spend a little bit more money and build the business a little bit more quickly. But miners have to move and shake with price, but the commercial consumers they get to work with the banks and fix their price over periods of time for their needs of their businesses.
Yeah. So I mean, let's say silver prices are too low, perhaps even too low to a point where it becomes mines start losing money just to operate. Why don't silver miners, let's say, hold back production, cause a shortage of sorts, and force prices to go back up?
Yeah, look, I've had discussions with several miners on this exact topic. It's not as easy as you think it is. A lot of mining companies, they produce concentrates. And a concentrate is just a pile of black powder that is produced from the mill after several chemical processes, which gives you this pile of powder that's made up of every metal that you can imagine, right? Iron and copper and gold and silver and zinc and lead. And this pile of stuff, gets shipped in a boat, over to Europe or over to Asia, where the refinery breaks it up into sellable components, and the miner gets paid, for the different elements, and sometimes get fined if there's too much arsenic in it or too much something else in it, they might actually get fined. Okay, if it's they call it a dirty concentrate. But nevertheless, the mining company gets paid. There's no way for the mining company to say, oh, by the way, don't sell the silver, put it somewhere in a corner somewhere, and we'll sell it later. The refinery would go like, what are we going to do with it? Like, you're going to pay us a storage fee, and it would just complicate the business, so dramatically, it wouldn't be workable. The other component of the business, we're pretty well run by the banks. Right. So, in the case of First Majestic, fortunately, we produce dory bars. We don't produce concentrates. So we are more flexible. We could potentially just store all our dory bars at the mines, just leave them there. Or we could, open up a warehouse in Mexico somewhere, a secure facility, and just store dory bars there. And we do hold back production. We've done it a few times in the history of the company where we'll hold an inventory of 500,000, 1 million ounces, and we'll just let the bars sit there. It's easy as a dory producer. Again, concentrate producer couldn't do it, but nevertheless, the banks have the buyer set up. And they have the accounts with the refineries. So we deliver our dory bars to X refinery. We use 2 or 3 of them, and we don't even know where the metal goes. We just ship it to the refinery. They spit it out the back door. It's still our metal, but it's now in pure, 999 silver gold bars. And the trader, the bank, whomever's the buyer on the other side, just says to the refinery, just, hey, ship it here. And that's where it goes. That's where it gets shipped, and we get paid. So it's very transparent. It's very simple for us to do. If we had to start, warehousing and then started trying to hold back too much of the supply, too much of our metal, we would have to have a marketing division in place. We'd have to, have 2 or 3 people managing that, flows of money, warehousing of metal. It would complicate the business quite dramatically, and on the surface, it sounds like a fantastic idea, but you would need a lot of the mining companies to agree to do it. In a 750 million ounce market, we produced, call it 23 or 20, whatever it is. Actually, no, that's equivalency. So on a silver basis, we produced about 12 million pure silver ounces in 2020. So that's only about 3% of the entire world market that First Majestic produces. So and most of the silver comes from concentrate mines. They come from the big copper mines in Australia. They come from the big, zinc mines around the world. Most of the silver doesn't come from pure silver mines like, First Majestic is so fortunate in owning. And that's what differentiates us between the concentrate producers. But yeah, it would be impossible to get all these mining companies to agree on doing something like that.
What's the cost to produce an ounce of silver today?
Well, it does change. The COVID situation has added some cost to our bottom line for 2021. We're hoping that it's going to be a short-term cost. It's about an extra $5 million in costs that we're expecting to be added to the business. Diesel has gone up in price year over year. We're fortunate though because we've got LNG coming in, which is going to be a huge cost savings. Santa Elena, which is our second largest mine, actually spends about $12 million a year on diesel, which is a pretty ridiculous amount of money. And that's going to be reduced to probably more like 3 or 4 million ounces or dollars, for diesel. And so we're going to save, possibly $8 to $9 million on diesel costs at Santa Elena. So we're always looking for ways to cut costs, but there's always inflation. Whether it's employee costs, peso-driven costs, oil I talked about, but a lot of the chemicals that we produce or that we consume, like cyanide, ammonia, these chemicals come from oil and gas. So if oil prices go up, then of course a lot of the components that we use in the processing also goes up in price. So it's a constant battle. Our costs have gone up a little bit year over year, but we're in the 14 kind of dollarish range on a all-in sustaining cost basis.
You think it's more advantageous to be a primary silver miner or maybe a secondary silver miner where there's a little bit more diversity with all the different metals that they pull up?
Yeah, it's a good question. Going back to when I put the company together in 2002, 2003, I didn't really think of the difference. I just wanted to become a silver mining company, and our first mine happened to be a concentrate producer. It produced at the time a silver dory bar, as well as a zinc concentrate, as well as a lead concentrate. So it produced three separate products. And it was fine, like we were making money and so on and so forth. But over time, the refineries started to really take advantage of the miners, and they started to really jack up the cost of refining. And it was due to lots of different things, environmental standards being squeezed around the world, China, putting more standards in place and not allowing so much of these so-called dirty cons coming to their country from around the world, and because of pollution issues and so on and so forth. So it became harder and harder for a mining company to sell concentrates, and it became much more expensive. So over years, over the next 10 years, we noticed that we started losing money on the lead and zinc component of the concentrate. And it was the silver that we were in, and thank goodness that we had some gold as well on top of that, which we did occasionally. That would be enough to make a profit, despite the fact we're losing money on the lead and zinc. But you couldn't separate it because it's all part of the same concentrate, right? That's sort of my point, going back to earlier what I said. And so we decided a couple of years ago that we're going to get out of that business, and we shut down all our concentrate producers. So we had 7 mines operating in 2017, and today we have 3 mines operating, and we're producing just simply silver and gold in the form of about 60-40, approximately 60% silver, 40% gold. And it's great just to produce 2 metals in the form of dory bars. We're in a great position, we're profitable, and I'm glad to see where we're at today.
We see that the silver to gold ratio is about 70-1 or so. We hear the historical ratio is about 16 or 20-1, and yet we hear from miners that the ratio is about 8 or 9-1. Can you tell us what the true mining ratio is?
Well, when you say miners, I think you should say miner, because I was the one that brought that up to the industry, 3 or 4 years ago when I put First Majestic together. 18 years ago, the mining rate was around 11-1. So that means for every 1 ounce of gold mined worldwide, 11 ounces of silver were being mined. The scientific theory is that there's approximately 16-1 silver to gold ounces in the Earth's crust, right? And that ratio stayed, from a financial perspective. This is how currencies were based, and so on and so forth. Up until several hundred years ago, it was a pretty flat ratio. Gold to silver traded at basically 16-1 for over 500 years. And it wasn't until the United States came off the gold standard in 71, and then the COMEX started trading silver in 74, that this disconnect actually occurred. And that's when the banks started coming in. That's when hedging started coming in, and that's when the whole paper market was created and everything else. And so now you've got this blowout of this ratio, of 70-80-1. It seems to be stuck in, and it's been there for several years, as you know. But it doesn't make a lot of sense to me. It's very much financially driven. Above ground supplies are dropping, production's dropping, consumption's going up. You got 2 major drivers: electric cars, solar panels, other technologies coming. I think there's a perfect storm. I think we're going to see ratio collapse. We saw the ratio get down to 31, I think it was in April 2011, 31 or 33 or something, from memory. But I think we're going to get closer to its actual mining ratio of 8-1. We may never see 8-1. But it could be 10-1 or 20-1. But whatever it gets to, it should not be where it's trading at today.
I've seen you tweet out $100 silver. I like silver. I love my silver, and it's a number that seems to make its rounds for the upside price of silver. Why do we look at this $100 per ounce silver, and can it be a reality, and perhaps when?
Well, I felt like I was probably the first to ever come out with the triple-digit silver phrase. Quite some time ago, I came out with that phrase. I've seen in the last year or so that there has been others joining that bandwagon, or at least that viewpoint, I should call it. And it's nice to see. At least I'm not alone anymore. But it's based on simple math. It's just it's the mining rate. That's all it is, just pure supply demand fundamentals. And we saw cobalt take off. We've seen lithium do well. We've seen palladium and platinum do well. Copper's done quite well. Silver is the only metal that has not surpassed its old nominal high ever. And that old nominal high was in 1979, I guess it was, or 1980. And it didn't last very long, but, it was up at $50. And, we got close to that in April 2011. And it's shocking to me where you've got such an important metal, such a strategic metal that is just so much reliant on the paper pricing mechanism that, all the people that tend to price the metal are so fixed on this, where they think silver should be trading at. So, and then they just subconsciously traded at those prices, yet they're not looking at the true supply demand fundamentals of the metal itself. I'm hearing stuff, now with Biden in as president, and I've heard a couple of people dropping the word silver, and hey, this might be an important metal to be looking at for the next cycle. So it's nice to hear some of that chat coming, but it's really the first time, since I put First Majestic together, that I've actually started to hear people talk about silver in a more strategic way that I've been thinking since I put the company together.
Okay, you think any of the monetary fiscal policy from the new administration is going to help to start push the price up for silver?
I think it's going to push everything up. Quite honestly, I think we're going into a inflationary period, and there's going to be tons of money printed, and these governments aren't going to stop. And and of course, they're not only you have the money printing, but you also have them pushing green technology. So you almost got best of both worlds. And then I'm bullish on gold because of the money printing, but I'm very, very much more bullish on silver because, of course, the money printing, but about the whole new Green Deal and where we're going with technology. If we're going to be doing all the things these governments want to do by taking fuel combustion cars off the roads of all the cities around the planet, you're going to need a lot more silver than what we're currently mining today.
Okay, the perfect silver storm, Keith Neumeyer. Before we wrap up, can you tell us more about First Majestic Silver Core and, of course, First Mining Gold Core?
Sure. Okay. Well, First Majestic is all Mexico. We got 3 producing mines. We employ something like 5,100 people. We ended the year off with record cash of about $240 million in the bank. We've launched our first ever dividend, which will be paid to shareholders in I guess April, May, shareholders of record of March 31st. So we're going to be paying quarterly dividends. So that's pretty exciting for me. As a CEO, it's something we've been wanting to do for quite some time. And after 18 years, we're finally doing that. So that's going to be pretty good. We're going to have some decent production growth as well. We're projecting somewhere around a 10% increase in production growth in 2021. So just, with that and improving metal prices, silver and gold prices in 2021, I think, 2021, 2022, 2023 are going to be great years for First Majestic. First Mining, and I'm the CEO and founder of that company. First Mining Gold, I'm the chairman and founder. Company I put together in 2015. It's gold, Ontario-based primarily, some Quebec, some Newfoundland, but primarily Ontario. A couple of big assets. They just put out a PFS, a pre-feasibility study, the other day. People should go to the website, look at it. It's one of the biggest undeveloped, or actually could be the largest undeveloped gold project in all of Canada. Right in Ontario, great mining-friendly jurisdiction. It's under the permitting process right now, and I know shareholders are super bored with permitting. It's kind of a boring part of the mining sector, but you got to do it. But as the project gets closer to getting approved for permitting and closer to the construction decision, I think the stock is going to look pretty good. And I full disclosure, I just filed my insider trading report yesterday, and I bought 1 million shares of First Mining in the public markets at 40 cents yesterday. So I'm a huge supporter of that company, and it's something people should look at. But both go to the websites, do your own due diligence, and call investor relations at either company if you need further information.
Yeah, I was going to ask, not that you're biased or anything, but is it a good time to invest in miners?
Look, a lot of them, you got to rotate your money a little bit. Don't fall in love, with any one of them. Like I trade on core positions. So I'll like a story, and I say, okay, this is one I'm going to buy. And I go in and I'll accumulate a position over a period of maybe a month and maybe 2 months, depending on the liquidity, because a lot of these stocks are very illiquid and they're hard to buy. So you just sit back and then you accumulate a position over a period of time and make sure, you do your own due diligence. Management's everything. Make sure you look at management, because that's key to any profitable investment or successful company. But once you start buying it, take your time, and then that way you have a good low average cash base, and then you just wait it out. And when I see a stock go up 50%, I'll look at it and go, now would I buy that stock today at this price? And it's either a buy, sell, or hold question. You're up 50% on your money, right? If you sold half your stock at that time, the rest of your stock is for free, right? Or a quarter of the stock is for free. So you make that call. So most cases I'd probably hold on, particularly in a bull market that we're in right now, because these stocks are going up 200-300%. So then when it gets to 100%, you ask yourself the same question. And 250%, 300%, and then usually about 300%, I'm starting to sell stock, and I'll start 10% of my position, 20% of my position, 350, 10%, 20%, 4, 10, 20%, 450, same thing, $5, same thing. So by the time the stock is $5, I'm probably out, and I may not even keep a core, right? I'll be completely out of the trade. If the stock only gets up to 150 or 200%, and I've maybe sold only 10 or 20% of my position, and the stock drops 50%, I may get back on the bid and buy back my position, because I'm trading off my core, right? So, and that's what you have to do with these things, because they're very volatile. And one thing, they're up 500%. Next thing you know, they're down 80%. And I've seen it happen too many times. And so take your profits, always look for your next investment, and rotate your money in and out of different companies, and try to just, be smart about it.
Great advice. Keith Neumeyer, we appreciate the time you've given us, and we wish you and First Majestic all the best in 2021.
Great. Well, appreciate your time.
That was Keith Neumeyer, CEO and co-founder of First Majestic Silver. To get more first-hand info regarding mining, please do visit firstmajestic.com. If you want the audio versions of this interview, please go to SBTV iTunes and SBTV Spotify.